Moving on, as nuclear negotiations are set to resume, Iran is eyeing decades-old block funds held across 9 countries, a financial lifeline that could reshape any deal's terms. Iran is walking into nuclear talks with the Trump administration, carrying a very specific balance sheet. Upwards of $100 billion in frozen assets blocked on oil revenues, seized accounts, and sanctions-era lockdown sit scattered across 9 countries, from Baghdad to Beijing to Seoul. Tehran wants that money back, and that demand is now central to any deal. Some of these assets have been locked since shortly after the 1979 Islamic Revolution, nearly as old as the Republic itself. That's 4+ decades of compounding economic exclusion, not a recent sanction squeeze. Iran's economy has been structurally starved. The single largest tranche of between $20 billion and $50 billion is held in China, reflecting years of Iranian oil sold under sanctions workarounds. Beijing's cooperation in releasing these funds, or its leverage in withholding them, gives China an unusual weight in a US-Iran negotiation without formally being a part of the deal. Iraq's $15 billion figure is notable for a different reason. That reflects funds accumulated from oil sales and cross-border trade, money that sits in a country that Iran has deep political influence over, yet cannot freely access due to US dollar clearing controls. That money is frozen not by the architecture of the global financial system itself. South Korea and India each hold $7 billion. Both ocean democracies had imported Iranian oil under waivers before Washington tightened the noose. Their position is awkward, as they owe Iran money for delivered energy, but paying it means defying US secondary sanctions. Any deal that unlocks this money signals a significant shift in American enforcement posture across Asia. The $6 billion held in Qatar made headlines in 2023 when a prisoner swap deal briefly unblocked a tranche, before the funds were refrozen amid political backlash in Washington. That episode reveals a key risk. Even when deals are struck, domestic US politics can reverse asset flows before Iran can deploy them. Tehran knows this and expects any new agreement to demand harder legal guarantees than 2023's arrangement provided. Iran's nuclear leverage is real but declining as its program advances. The country's economic desperation is also real, with inflation above 40%, a currency collapse, and oil export constraints. The frozen asset map shows what a deal's price tag looks like from Tehran's side. Whether Washington is willing to pay it and whether it can legally do so is the defining question of these talks.